We are live. How's everybody doing out there? Jeremiah Conjure here from Annuity Association. And wow, back-to-back days putting these annuity reviews together. Very excited that I've had some time to get back into the saddle here and get this content out for everybody that's researching annuities. So really excited to talk about the annuity that we're reviewing today. This has become a very popular selling fixed indexed annuity as of Q2 of 2021, the most recent analysis that we have for annuity sales market wide. This is ending up in the top 10. And in the bank distribution channel, this is actually one of the more popular ones, coming in at number 2 overall. So if you're being pitched this annuity, chances are that somebody from a local bank has presented this to you. And hopefully you found this review to be able to take some time to research and do your due diligence to determine whether or not this annuity is something that you should be considering for your defined financial objectives. If this is the first time you're watching these unbiased annuity reviews, the sole premise of this content is to help bring more transparency to the annuity buying process. And we do that through the form of these reviews. To give a little bit of disclosure about me, I am Jeremiah Conjure. I'm an independent annuity advisor. I work with clients in all 50 states. So if you get some value out of this annuity review and you'd like to work with me directly, maybe you have some questions, feel free to visit our website at annuityassociation.com. Right there on the main page, click the green button to request your free report. And I will reach out to you in a timely fashion. You'll be taken to a series of questions, one of those being, would you like to be contacted by an advisor? Simply answer yes, leave your phone number, and I will personally reach out to you to see how I can help point you in the right direction. Okay, so if this is the first time you're watching, thanks for tuning in. First thing we're going to cover is our product brochure, go over all the features and benefits. Then we're going to take a deeper dive into the specific index crediting strategies found in this particular annuity. And from there on, we will then take a look, if we have some time, at an example illustration to show you how this thing stacks up on a ledger when forecasting the back-tested rates of return. So without further ado, let me go ahead and share my screen. We're going to get into our legal disclaimer, get that fun stuff out of the way, and then we'll dive right in. Okay, so today's review, we're going to be discussing the Assurance Select 5-year and 7-year plus fixed indexed annuity. So this annuity comes in two different versions, the 5-year and the 7-year version. This Assurance Select fixed indexed annuity is offered by Great American Insurance Group. So if you're not familiar with Great American, great company, A plus rated, very strong outfit. And this product, what we're discussing today, is the Assurance Select 5 and Assurance Select 7 plus fixed indexed annuity. This is an independent review brought to you by annuityassociation.com. This is a review, not a recommendation to buy or sell an annuity. Great American has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors, so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have any specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of annuityassociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. All right, so let's go ahead and dive into the product brochure, and we will go from there. So if you haven't done so already, you can enlarge your viewing window by clicking in the bottom right-hand corner of your screen. There should be a little box there, and that's where you'll find the enlargement window. Let me go ahead and save this onto my desktop, and that way I can make it a little bit larger here. Bear with me while I do that. Okay. Let me get that going here. Okay. Thanks for your patience. Oh, crap. Wrong button. You can see I'm not an official live spokesperson. I'm doing this on the fly. There we go. Okay. Bam. All right. There it is. It's larger for us. Great. Thank you so much for your patience while I got that figured out. So we're talking about the Great American Assurance Select 7 Plus and Assurance Select 5 Plus fixed indexed annuity. All right, let's go through these nice photos real quick. Photos were submitted by Gabby in Missouri. Very cool pictures there. So first and foremost, let's discuss what the benefits are. The Assurance Select 7 and Assurance Select 5 Plus help secure your retirement. A fixed indexed annuity is a vehicle that offers growth opportunity. You can allocate your money to interest strategies that may help you accumulate more assets for retirement. They also contractually guarantee protection from loss. Regardless of market conditions, you won't lose the money you contribute to your annuity unless you take a withdrawal or surrender your contract during its early withdrawal period. In this case, there's a 5-year surrender charge period or 7-year withdrawal charge period. And then in addition to those two benefits, guaranteed retirement income. When you're ready to turn the money you've accumulated in your annuity into retirement income, you can select from a variety of payout options, including an income stream that will last for the rest of your life. So let's talk about some of these annuity basics in the Assurance Select 5 and Assurance Select 7 from Great American. Simply put, an annuity is a contract between you and an insurance company. It is a long-term financial vehicle that's designed to protect and grow your money and then provide a stream of income during your retirement. In fact, other than pensions, annuities are the only products that provide guaranteed lifetime income. And Great American Life is committed to offering annuities that are simpler and easier to understand, helping to achieve your goals with no surprises. That's a great add-on there. Sometimes annuities can seem complex, and I really appreciate that Great American Life does their best to simplify their product offerings. Here's a couple nice photos of a couple in Ohio who is a valued annuity customer by Great American since 2015. That is George. There's George and his, I assume, his lovely wife there in the snow. I don't know anything about snow. I'm a Floridian, so I've never seen snow. Don't make fun of me. Don't hold that against me. I prefer the beaches and oceans here. Okay, so let's pick your path to growth. Fixed indexed annuities offer multiple interest strategies to help you build your savings. Index strategies offer you the unique opportunity to earn interest based in part on market performance without the risk of market loss. A declared rate strategy allows you to grow your money at a fixed interest rate that is set at the beginning of each 1-year term, and you have the flexibility to choose the strategies that are right for you. We know your needs may change over time, so you can revisit your strategy selections at the end of each term. Okay, let's take a look at these specific index strategy types. So they do have a fixed account in this Great American Assurance Select fixed indexed annuity. That rate is declared upon application and then renewed annually every single anniversary. So right now, if we go into this particular product and we look at the fixed account, it's currently at 1.85%. Okay. And then in addition to the fixed account, they also have the various index strategies. They offer a 1-year point-to-point and a 7-year cap lock annual point-to-point. So in regards to the 1-year point-to-point, the interest is going to be credited annually on the last day of each term year. And the rate is, whether it be a cap strategy or the participation rate strategy, is set at the beginning of each 1-year term and guaranteed for that term year. In regards to the 7-year cap lock annual point-to-point, that interest will be credited annually on the last day of each term year. So in this case, it's a 7-year. And the cap is set at the beginning of the 7-year term and guaranteed for the entire 7-year term. We'll be breaking those down here a little bit more in depth here momentarily when we get to our back-tested analysis. which will take these specific index crediting strategies that are offered in the Assurance Select fixed indexed annuity from Great American. And we're going to take a look back and test those index strategies to see how they would have hypothetically performed over the last 10, 15, and 20-year periods. Now, I must make a disclaimer that prior performance is not always an indicator of future performance, but it's still good to give us a baseline of potentially what these indexed annuities and these crediting strategies specifically offered in this annuity could look like, what the performance could look like potentially. So how do the index strategies work? It's very simple. Funds in an indexed annuity, in an index strategy earn interest based in part on the positive performance of an external index, such as the S&P 500. Interest is credited on the last day of each term year and is guaranteed to never be less than 0%. Because of the contractual guarantee found in fixed indexed annuities, that your money can never be lost due to market volatility or negative market index performance, the worst you can ever do in these types of products is a zero. So if the index performed negatively during that 1 year period of time, the worst scenario for you as the investor in this product or the owner of this product would be that you get credited a zero for that term. The Assurance Select 7 Plus offers point-to-point index strategies. These strategies compare the closing value of an index at the end of a term year to the closing value on the first day of the term year. If the result is positive, interest is credited. If the result is negative, the credited interest rate is 0%. The amount of interest credited at the end of the term year is limited by either a cap or a participation rate. A cap is the maximum interest rate that will be credited for a term year. So very simple. It's a ceiling. If you have an index crediting strategy that has a cap, then whatever the index's performance is, you will only earn up to that cap. So if the cap is 4% for the year and the index performs at 5%, well, you're only going to be credited the 4% because that was the cap. You don't get that extra 1% because your cap rate is set to 4. That's just an example, by the way. A participation rate is the percentage of a positive index change that will be credited for a term year. So a participation rate is just a fancy word for how much of the index's performance, so whatever index you're allocated to, of that performance for that given crediting period. So if it's a 1 year point to point, whatever that positive growth was for that year, the participation rate determines how much of that growth do you participate in as the owner of the contract. So if the participation rate is 50% and the index went up 10% during that 1 year, well, they would take that 10% growth, multiply it by a 50% participation rate, and your credit that's credited to your account value would be 5%, half of that 10%, right? In that same example, if the participation rate was 75% and the index went up 10%, you would get 75% of that 10% credited to your account value. In this case, that would be 7.5%. So hope that makes sense. Any interest credited to your account value is locked in at the end of each term year. It cannot be lost due to future market performance. Very key note there. Protect your earnings with annual reset. This is one of my favorite features found in fixed indexed annuities. I don't think advisors talk to it enough. I don't think it's explained in enough detail. It's very, very critical to understanding this feature because it's really a benefit that you can't find in any other financial vehicle to grow your money safely. So a annual reset is found in a fixed indexed annuity, and it not only protects your principal, it also protects your earnings with annual reset. Any interest credited to your account value is locked in at the end of each term year. It cannot be lost due to future market performance. Additionally, if index performance is negative for a term year, your annuity can earn interest the next term year, even if the index has not made up its previous loss. Let me read that one again. That's very important, that sentence. If index performance is negative for a term year, your annuity can earn interest the next term year, even if the index has not made up its previous loss. So example, in year one, if there was negative performance for the index strategy, you would just get a zero. But upon that second crediting year, you would have a new starting point, which would be wherever the index value is upon that second year, the start of that second year. And you're not required to wait for the index strategy to break even again and make up its previous loss before you can ever earn interest. You start at that low point, wherever it is, upon your second crediting year. So you don't have to wait for it to rebound. It's huge difference here versus having money in the stock market. If your stock portfolio went down 10% in the first year, well, you'd have to wait for it to break even again in the second year before you would be able to count any gains or earn any interest, right? You would have to break even. In an indexed annuity, you don't have to worry about that. And this means your annuity earns interest for any term year in which the index change is positive. So here's an example of how the annual reset works. You'll see at term year one, it's locking in that high point, this green lock symbol. But then term two, it takes a dip, right? The market index strategy takes a dip in year two. But because you don't experience or incur any losses, that lock-in keeps you level. So the line you'll see goes right to that next lock, that orange lock symbol. It's just level. And then if it goes up again, that upon that start of that term year three, the index value goes up again. Well, you actually get more interest because you're locked in at that high point where you were from year one. And because your new starting point, starting in term year three, was at that low point down here, and it also experienced positive growth, you get to benefit from that positive growth. And you'll see that blue lock symbol in the third year goes up. And then again, they're showing a decline going into year four, and it just stays level. Huge benefit, huge benefit. It's another reason why you don't have to worry about timing the market, right? You can go into an indexed annuity, not have to worry about where we are in the market today. And with the peace of mind knowing that whatever happens, you're going to get a zero if it's negative, or you'll go up if it's positive, but you'll never go down. That's a huge added perk, and that's the power of the annual reset. Okay. Coming on down, looking at some more beautiful pictures there. So let's talk about the additional benefits offered in the Great American Life Assurance Select 5 and Assurance Select 7 fixed indexed annuity. Tax treatment that allows faster growth. So like all fixed indexed annuities, the tax is deferred in a fixed indexed annuity. You don't pay taxes on the interest your contract earns until you start receiving payments or take a withdrawal. So your money can grow at a faster rate than it would in a taxable product. Very huge benefit there. So you get the triple compounding benefit of tax deferral and growth. And then the guaranteed retirement income aspect. With life expectancies on the rise, you may worry about outliving your savings. The Assurance Select 5 and Assurance Select 7 Plus provides the opportunity to turn the money you've accumulated in your annuity into a steady stream of retirement income. Depending on which payout option you choose, income benefit payments are made for a specific number of years or for life. Now, this is an optional feature. You don't have to do this. You don't have to elect to turn this into an income stream. But if you want to do so, you can definitely do that. It is an option that's found in all fixed indexed annuities. And then last but not least, protection for your loved ones. No one likes to think about it, but part of achieving peace of mind is knowing what would happen to your money if you pass away unexpectedly. With the Assurance Select 5 Plus and Assurance Select 7 Plus, any death benefit is paid directly to your beneficiaries, which allows them to receive your financial legacy without the cost and delays of probate. Let's talk about your liquidity needs. That's very important. It's a very important part of the decision on how much money you should consider putting into a fixed indexed annuity like this one. The Assurance Select 5 Plus and Assurance Select 7 Plus is intended to be a long-term product. However, you will have access to a portion of your money each year with penalty-free withdrawals. During the first contract year, you may withdraw up to 10% of your purchase payments. After the first contract year, 10% of the account value on the most recent contract anniversary may be withdrawn. It is important to note withdrawals in excess of this amount may be subject to early withdrawal charges and a market value adjustment. Early withdrawal charges and market value adjustments end after 7 years, or 5 years if you choose the 5-year version. And Great American Life's simple promise to you is superior service and annuities that are easier to understand. And Great American Life Insurance Company's headquarters is found in Cincinnati, Ohio. Beautiful picture there of Cincinnati, Ohio. All right, we're winding down the product brochure here. Thank you so much for tuning in here and listening to this part of our review. Stay tuned. We're going to be looking at the specific back-tested performance of the various index crediting strategies offered in this fixed indexed annuity, and then we'll also be taking a look at the example illustration. So Great American Life believes in keeping things simple. Why choose Great American Life? As a leading provider of annuities, Great American Life Insurance Company is committed to helping people plan for a secure retirement. They offer a level of financial strength that our customers can count on, and they are a wholly owned subsidiary of MassMutual, one of the largest life insurance companies in the U.S., founded in 1851. So they've been around a very long time, very stable, very secure. And their simple promise is this: when it comes to planning for your retirement, Great American Life believes it pays to keep things simple. From the products they offer to the service they provide, they make things as easy as possible. Whenever you have a question, they're only a phone call away. It's part of their simple promise to you: superior service and annuities that are easier to understand. A few quick Assurance Select 5 Plus and Assurance Select 7 Plus features. The issue ages are 0 to 85 or 0 to 75 if it's an inherited IRA or non-qualified inheritance. Minimum payment that you can, premium payment that you can put into this type of account is $10,000. And you can add to your annuity during the first 10 contract years with additional purchase payments of at least $2,000. In regards to fees, there are no upfront fees or charges. All your money goes to work for you day one. So very, very big to note there. One of the biggest misconceptions in the annuity world is that annuities are highly feed. That's completely bogus. Almost said a bad word there. It's completely bogus. There's only certain annuities that are known to be highly feed. A fixed indexed annuity is not one of those. And if anything, fixed indexed annuities are very often low feed or zero fees. In this case, this product is an example of a zero fee fixed indexed annuity. Interest strategies. So there's several different options for the S&P 500, a 1-year point-to-point with cap, a declared fixed rate, an S&P 500 7-year cap, lock, annual point-to-point, an S&P 500 risk control, 1-year point-to-point with participation rate, S&P US retiree spending, 1-year point-to-point with participation rate, iShares US real estate, 1-year point-to-point with cap, and the Spider Gold shares, 1-year point-to-point with cap. I will be covering all of those here momentarily to show you how they stack up in our hypothetical back-tested analysis. Penalty-free withdrawals during the first contract year. You may withdraw up to 10% of your purchase payments. After the first contract year, 10% of the account value on the most recent contract anniversary may be withdrawn. Amounts withdrawn in excess of the penalty-free withdrawal allowance may be subject to early withdrawal charges and a market value adjustment. So if you put in $100,000 into this account, upon the first contract year, after completing it, you could access 10% of that $100,000 plus any interest credits that have been applied to the account value. So you could take out essentially at least $10,000 if you had $100,000 in there to start, and possibly more if the interest credited was favorable after the first year. Early withdrawal charges. So during the first 5 contract years or 7 contract years, depending on the version of the product you select, an early withdrawal charge starting at 9% is applied to surrenders and withdrawals that exceed the 10% penalty-free amount. All charges end after 5 years or 7 years, depending on the product version that you select. So here is an example of the withdrawal charge schedule, starting at 9% in year 1 and then working its way down by 1% each year thereafter. Market value adjustments may apply during the first 5 or 7 contract years. The market value adjustment is calculated by comparing the value of a specific index at the time they receive each purchase payment to the value of the index when you choose to surrender your contract. This can result in an increase to your surrender value during a period of decreasing rates, or a decrease to your surrender value during a period of increasing interest rates. The market value adjustment will also apply to withdrawals in excess of the 10% free withdrawal allowance during the first 7 contract years. Okay, guaranteed minimum surrender value. They will offer a guaranteed minimum surrender value, never guaranteed to never be less, based on an 87.5% of purchase payments plus interest credited daily at a minimum guaranteed rate. Ask your financial professional for the rate that will apply to your contract. This means in certain situations when your contract earns no interest due to flat or declining index performance, the amount payable upon surrender may still be greater than the amount of money you contributed to your annuity. It's important to remember the guaranteed minimum surrender value is reduced by prior withdrawals, and the guaranteed minimum surrender value will not be less than the minimum values required by the state in which your annuity is issued. In regards to income payout options, so they do offer a fixed period of income payments, which means you will receive an income benefit payment for a fixed period of time that you select. Life or life with a minimum fixed period. You may receive income benefit payments for life. And if you select a minimum fixed period of time and pass away before the end of the period, the remaining income benefit payments are paid to the person you designate. And then last but not least, joint and one-half survivor. Income benefit payments are guaranteed for your life and the life of a designated joint annuitant. If you are survived by the joint annuitant, he or she will receive 50% of the income benefit payment for life. So as with all fixed indexed annuities, you have the ability to annuitize the contract and elect for a fixed period certain of income, a life or life with a minimum fixed period, or joint and one-half survivor. Annuitization is simply the process of exchanging the account value and giving it to the insurance company in exchange for that payment. So that is an option for you if you elect to do so. Not mandatory, not required. And then there are a couple, last but not least, included waiver riders. The first one is the extended care waiver rider, which is after the first contract year, if you're confined to a nursing home or long-term care facility for at least 90 consecutive days, you have the option of withdrawal up to 100% of the account value without incurring an early withdrawal charge. Great peace of mind there in the event you do have a need for nursing home or long-term care down the road. If you are within that surrender period, you have peace of mind knowing that you can access 100% of the account value without incurring any charges. And then terminal illness waiver rider. After the first contract year, if you are diagnosed by a physician as having a terminal illness, you have the option to withdraw up to 100% of the account value without incurring an early withdrawal charge. A terminal illness is defined as having a prognosis of survival of 12 months or less, or a longer period as required by state law. Now, some of these features are only available in select states. To be honest, it's available in most states. There's only a handful, sometimes up to a dozen or so that may not offer these features, but it's best to check with your financial professional, or if you'd like to work with me directly, I work with clients in all 50 states. We can definitely figure out what's available in your particular state and also compare these features and benefits to other annuities to see which is right for you. To do that, you can go to annuityassociation.com. Right there on the main page, click the green button to request your free report. You'll be taken to a series of opt-in questions. One of those being, would you like to be contacted by an advisor? Simply answer yes, and I will reach out to you in a timely fashion to see how I can help, and I'd be grateful for that opportunity. Or if you're tech savvy, I also have another green button on the front page there. Actually, I think that one's red. It's a red button where you can go right to my calendar and schedule your own meeting right there, and pick a day and time that's convenient for you, and then it'll schedule a Zoom meeting for us to get on face-to-face virtually to discuss what's important to you. Okay, so we're wrapped up here with the brochure. Thank you for bearing with me through that. Now let's take a quick look into our back-tested analysis to see the hypothetical historical performance on the Assurance Select 5 Plus and Assurance Select 7 Plus fixed indexed annuity offered by Great American Life. These are going to be listed in chronological order from highest to lowest in the back-tested analysis for the last 10-year period. So coming in number one in terms of which index strategy is going to offer the highest growth potential based on this back-tested analysis. Again, back-tested analysis or back-tested performance is not the best indicator for future performance. None of us have that crystal ball to know what the markets are going to do moving forward, but at least we get to understand what they would have done potentially in the past to give us a good understanding and a baseline level of education to make a confident decision. So coming in number one is the 1-year S&P US Retiree Spending Index strategy. This is a 1-year point-to-point with a participation rate. And the participation rate that's currently offered at the time of this review is 75%. So whatever the index strategy's performance is over that 1-year period of time, you'd multiply that by 75%, and that would be the interest credit that's credited to your account value. So when we look back over the last 10 years from December 31st of 2010 to December 31st of 2020, the average annualized rate of return for that specific index strategy is 4.34%. In addition, our software takes a step further and identifies the best 10-year period when looking back over the last 20 years. And in this case, that green number that I'm pointing at here with my mouse is the best 10-year period, which is from December 30th of 2008 to December 30th of 2018. And the average annualized rate of return was 5.67%. Now, this is the Assurance Select 7 Plus. We'll be looking at the 5 Plus here momentarily. Rule of thumb, just so you know in advance, the longer term that you commit to in regards to the surrender period, the higher the participation rates will generally be, thus leading to higher growth potential. So a 5-year is obviously going to offer lower participation rates, therefore lesser growth than a 7-year. The lowest 10-year period over the last 20 years is identified as December 30th of 2010 to December 30th of 2020, and that was 4.34% per year. Now that red number is still a positive number. It's not a negative number. It's just indicating in red as the lowest 10-year period over the last 20 years. And then we also have some 15-year data on this index strategy with that participation rate of 75%, and that was 4.28% per year over the last 15 years. All right, coming in at number 2 in regards to the index strategy. So these other ones here, you'll see the par rates are a little lower. Each state governs their own body of insurance. So these specific, I have it sorted for all states right now. So most states are offering 75%. Some may offer only 70% on that same index strategy. Obviously, thus leading to a slightly lower, average annualized rate of return during the same periods of time. But number 2 coming in for the index strategies is the S&P 500 average daily risk control 10%, annual point-to-point with participation rate. The participation rate is currently 50%. And looking back over the last 10 years, the average annualized rate of return is 3.8%. Highest 10 years from 2009 to 2019, December 30th, is 4.06% annualized rate of return per year there, and then 3.8% lowest 10. Okay, now we're looking at the Assurance Select 5 Plus, and the top crediting strategy identified in that within our software is the 1-year S&P 500 average daily risk control 10%, annual point-to-point with a participation rate of 50%. And we will see the 3.8% is the average annualized rate of return over the last 10 years. Highest 10 at 4.06% and lowest 10 at 3.8%. Coming in number 2 on the Assurance Select 5 Plus is the 1-year S&P US Retiree Spending annual point-to-point participation rate of 65%. Average over the last 10 years, 3.77%. Highest 10 at 4.92. Lowest 10 at 3.77. and the average of the last 15 at 3.72. Okay, just wanted to kind of go through these and see where else, what else was on the second page. Now, there are a few other index strategies offered. We have the Spider Gold, point to point with the cap. This in particular, okay, let me make sure I'm not skipping it up here. Okay, so this in particular here is offered in the Assurance Select 7, and that is a cap of 5.75% on the Spider Gold. And when we back tested over the last 10 years using that cap rate, the average annualized rate of returns at 3.41%, highest 10 at 4.49. And that was from December 30th of 04 to December 30th of 2014. And then the lowest 10 being from December 30th of 2010 to December 30th of 2020 at 3.41% over the last 10 years. Or excuse me, lowest 10 during that time, excuse me. And then 4.13% over the last 15. And then looking at the same strategy with the 5-year product, the 1-year Spider Gold point to point with a cap. The cap is 5.5%, 3.26% averaged over the last 10 years annually, 4.32 at the highest 10, 3.26 lowest 10, 3.97 over the last 15. And then remember, last but not least, we also had those 7-year locks. So on the Assurance 7 Plus, the 1-year S&P 500 point to point with the cap and that 7-year lock is 4%. So the cap rate's 4% at the time of this review. And when we look back over the last 10, that comes in at 10.78% average annualized rate of return. Best 10 at 3.04. And worst 10 at 2.64. And that was from December 30th of 01 to December 30th of 2011. Very difficult time in our economy, that 10-year period there. 2.89 over the last 15. And then we have some 20-year data at 2.71. And then let's take a look at the last but not least in the Assurance Select 7, the 1-year S&P 500. Also comes with a monthly average cap strategy. The cap is 4%, 2.72 last 10, 2.86 highest 10, and 1.92 lowest 10, 2.7% over the last 15, 2.32 over the last 20. And then in the Assurance Select 5, that S&P 500 point to point with the cap, 3.8% cap, 2.65% over the last 10, 2.92 best 10, 2.54 worst 10, last 15, 2.75, last 20, 2.59. Okay, so that's going to cover the index crediting strategy back-tested analysis. Last but not least, let's go into a quick illustration just to get an understanding of how this potentially would look on a ledger here. And we're going to look at the our software indicates, the strongest index crediting strategies that are available based on the back-tested analysis. So we're going to select the top one here for this illustration. And then we're going to assume that someone's putting in $100,000 and that they're a 60-year-old male in the state of Florida. The top crediting strategy over the last 10 years is at 4.34% per year, and that's that 1-year S&P U.S. retiree spending index strategy. We're not going to add any income riders at this time. We're just going to look at it from a pure accumulation perspective. So you'll see the guaranteed values, because you can't lose any money, and assuming there's never been any interest credited because the interest is not guaranteed, it is based on the index crediting strategies and their performances. But you'll see the 100,000 never goes down in value, and the death benefit always matches the account value to the far right here. Okay, and the surrender value column incorporates the surrender charge should you exit early before the fulfillment of that 7-year period. Obviously, the 100% $100,000 in the account value, never reducing, indicates that there are zero fees in this particular product. And now, when we look back over the last 10 years, we're going to be able to project that average annualized rate of return and how those sequence of returns would have unfolded and project them moving forward in this illustration. So you'll see we have $100,000 coming into the account in the premium column. And at the end of the first year, we had an interest credit of 4.35% come in and credit directly to the account value, bringing the account value up to $104,345. You'll see in year 2, we have an interest credit come in at 4.02%, bringing the account value to $108,539 at the end of contract year 2. Contract year 3, we have an 8.48% interest credit applied, bringing the account value at the end of year 3 to $117,742. And then another interest credit in year 4, 6.27% credited, bringing the end of year 4 account value up to $125,123. And then that 5th year, it's showing a 0% because over the last 10 years, at year 5, when we're looking at the last 10 years of performance, in year 5, there was obviously a negative performance for that year, and therefore giving us a credit of 0. And remember, we can never go down due to market losses. So leveling out the account value, end of year 5 at 125, 123. You'll see the death benefit in each year matches the account value. So that would be the amount that would go as a lump sum to your designated beneficiaries. And that's pretty much it. It's as simple as that. Very easy to understand. $100,000 going in. We're receiving annual interest credits, and the account value growing to $125,123 after 5 years. And since this is a 7-year, you'll see that after the end of 7 years, the account value has grown to $140,499. So if we were fortunate to own this product during 10 years ago and had a 7-year contract, this is potentially how this account value would have grown if everything was created equal and the offer that we are looking at today was available back then. So very cool, very easy to understand. I hope that brings some clarity to you in understanding this particular product offered by Great American Life. Again, if you have any questions or you'd like to work with me directly, I'd be grateful to have that opportunity. To work with me directly, I do work with clients in all 50 states. You can visit our website by going to annuityassociation.com. Right there on the main page, you can click the green button to request your free annuity report. Once you hit submit, you'll be taken to a series of questions. One of those being, would you like to be contacted by an advisor? Simply answer yes, and I will reach out to you in a timely fashion to see how I can help point you in the right direction. Or if you're tech savvy, you can go right to that annuityassociation.com website. Right on the main page, there's a red button to help you schedule a time right on my calendar that's convenient for you. So once you do schedule it, you'll be emailed a Zoom link. And that Zoom is the platform that we use as secure portal to conduct our meeting virtually and get a better understanding of what's important to you and how I can help. Thanks so much for watching. If you've gotten some value, don't forget to give us a thumbs up on YouTube or a like if you're watching this on Facebook or LinkedIn. Please give us a share to any friends or family members that could also benefit from this information. We would greatly appreciate that. This is Jeremiah Conger with Annuity Association signing off. Hope everybody has a great day out there. Take care of one another. Talk to you soon. Bye-bye.